Hello everyone, my name is Farhan and today you will solve 7 questions for non-current assets and depreciation. Make sure to focus and follow through the entire content for an excellent understanding. I promise you'll get a lot of value, so make sure to focus and watch the entire video. So let's begin with the first question. So a firm purchased a machine for $4,000 on 1 January 2021. The machine was expected to have a useful life of 4 years and a residual value of $1,000. The asset was depreciated on a straight line basis starting from the month of purchase. On 31 December 2023, the machine was sold for $1,550. What was the amount to be included in the statement of profit or loss for the year ended 31 December 2023 for profit or loss and disposal? So on the right hand side, you can get to see the workings, which I'll explain to you step by step. So what's happening here is we are working with the machine which has been purchased on 1 January 2021, and we expect to utilize this machine in our business for 4 years. After the end of the 4 years, we expect to sell this machine for $1,000, which is what we call the residual value, the value that we expect to get after the useful life has ended. So this machine is depreciated on a straight line basis. So since we are given the cost, the residual value, and the useful life, if you want to find the depreciation on an annual basis, you can see we have defined the difference between the cost and the residual value, and then you divide with the useful life. So the cost is given in the first line, which is $4,000. The residual value is $1,000, as you can see, and the useful life is 4 years. So once you do the calculations, you get a depreciation of $750 on a yearly basis or on an annual basis. Now, we know that we have purchased this machine on 1 January 2021, as the question explicitly mentions in the very first line. And here we are calculating the amount to be included in the statement of profit or loss for the year ended 31 December 2023. So from 1 January 2021 until 31 December 2023, 3 years have passed, which are 2021, 2022, and 2023. So if we know the yearly depreciation is $750 based on our calculations in the previous step, then now you want to find the total depreciation, you just simply multiply 750 with 3, and that's how you get $2,250 as the total depreciation for 3 years. Now, we know that we have sold this asset on the very last day of 2023, which is 31 December 2023, as you can see here. And when we sold this asset, we have sold this asset for $1,550, which is what we classify as the disposal proceeds, right? So we want to find out the carrying amount right before disposal. So the carrying amount refers to the economic benefits that are available within the asset for consumption or for use within a business for generating revenue. Now, right before the disposal, you want to find the carrying amount, and that is calculated by finding the difference between the original cost and the total depreciation, which is also what you refer to as accumulated depreciation. So the original cost given in the very first line of the question is $4,000. And the total depreciation based on our workings we have done before is $2,250, which is for 3 years starting 1 Jan 2021 and ending 31 December 2023. So once you do that, you get a carrying amount of $1,750. So given that you have sold this machine for $1,550, you know you have sold this machine for less than what it was worth. So therefore, you have made a loss, and that loss on disposal is the difference between $1,750 and $1,550, which is $200. Okay, so the answer for the very first question that we're going to fill in here is $200, and that $200 is the loss that we're talking about, so you can cancel out the profit in this case. All right, so if you are clear, let's move to the second question now. Now, the second question, which you can see, here is a statement. So non-current assets are long-term resources owned by a business that are not expected to be converted into cash or consumed within 1 year. These assets are held with the intention of generating revenue over a longer period, typically more than 1 year. Is this statement true or false? Now, this is basically the definition of a non-current asset. The reason we call this non-current asset is because we want to use these assets in our business for more than 1 year. If it was for less than 1 year, then we would call that a current asset. Now, when you buy non-current assets for use within the business, your main purpose of buying these non-current assets is to use these non-current assets within your business operations so that your business can benefit by generating more revenue. So all these economic benefits that are stored within these non-current assets, when you initially purchase them, they get utilized or distributed in the business, which helps the business generate more revenue. So, on a long-term basis, the business wants to make sure that these non-current assets are not sold. So you do not sell them. Your main intention is to just buy them and use for generating revenue. So obviously, this is a true statement. So when you select the answer for question 2, you just simply select that it's a true statement. Okay? All right, so let's move to question number 3. Excuse me. So the non-current asset register reflects a carrying amount of $53,230. An asset with the cost of $9,000 has been sold for $3,000, resulting in a loss on disposal of $625. No entries have been made in the non-current asset register for this disposal. The first part of the question is to find the updated balance in the non-current asset register. All right. So what we know is the balance that we have in the non-current asset register, we have a carrying amount of $53,230. And we know we just sold an asset, and the asset that we have sold has an original cost of $9,000 based on the question. This asset was sold for $3,000, which is what we refer to as the disposal proceeds. And when we have sold this asset, we have made a loss on disposal of $625. So we want to calculate the carrying amount of the asset that you have sold. So how do you find that? If you have made a loss of $625 and you know that you have sold this asset for $3,000, then it is rational and logical and obvious to calculate the carrying amount by simply adding the disposal proceeds with the loss on disposal. So the disposal proceeds is $3,000 and the loss on disposal is $625, which means the carrying amount is $3,625. So again, if you were to look from a different perspective, the asset that we just sold was worth $3,625 in terms of carrying amount. And we know we sold it for $3,000, which is the disposal proceeds, right? So you know you have sold it for less than what it was worth. And again, that means that you have made a loss on disposal of $625. Now, what about the updated carrying amount balance in the non-current asset register? It's simply you start with the initial balance of $53,230 that is given in the first line of the question, and then you subtract the carrying amount of the asset that you have sold, which is $3,625, and you end up with $49,605, which is option number C in this case, so we can circle that. Right? Now, I also have a second question for you. What is the accumulated depreciation of the disposed asset? Now, the accumulated depreciation is calculated by finding the difference between the original cost and the carrying amount. So normally, you may know this equation well from the perspective of the carrying amount, that if you want to find the carrying amount, you start with the cost and then you subtract the total depreciation, which is also known as the accumulated depreciation. So if you just use algebra, where you make accumulated depreciation the subject, then you can simply find this value by subtracting the carrying amount from the original cost, so which is what we have done here. Okay, so the original cost is given in the question as $9,000, as you can see in the second line of the question, and the carrying amount is $3,625 based on our calculations from part 1. So that's how we get an accumulated depreciation of $5,375. Okay. All right, so that's the answer for part number 2, which is 5,375. All right, so if we are clear with question number 3, let's move to question number 4 now. All right, so a firm's non-current asset register shows the carrying amount of $190,050. The non-current asset account in the general ledger shows the carrying amount of $140,050. The difference might result from a disposed asset that has not yet been removed from the non-current asset register. The profit on disposal of this asset is $2,500. Calculate the disposal proceeds. Okay, so what's happening in this question is that in the general ledger, we have a non-current asset account, right? And the balance as per that account in the general ledger is $114,050. But in the non-current asset register, it's $119,050. So you can clearly see that there is a difference or discrepancy, right? So this difference is due to an asset which has been sold that is being reflected in the general ledger, but we have failed to remove that properly from the non-current asset register. Okay, so what is this difference in carrying amount? So the difference in carrying amount is simply the difference between the balance you have been given in the non-current asset register, which is $109,050, and the balance that you are given in the general ledger, which already has accounted for this disposal, and that is $114,050. And you get a difference in carrying amount of $5,000. Okay, so this $5,000 simply reflects the carrying amount of the asset that we have sold. Based on the last line of the question says that the profit on disposal of this asset is $2,500. So if you know the carrying amount is $5,000 and you know that when you sold this asset, you made a profit of $2,500, then the disposal process is simply $5,000 plus the $2,500, which is $7,500. All right. So the next question is now asking you, what is the purpose and function of a non-current asset register? Now, a non-current asset register is there, which helps you to track and manage all the long-term assets that we have in the business. And these long-term assets could be buildings and machinery, right? Moreover, the non-current asset register also contains detailed information for recent acquisitions or all acquisitions of non-current assets, the locations of the specific non-current assets, and any relevant depreciation for all types of non-current assets. At the same time, maintaining a non-current asset register helps us maintain accuracy in financial reporting. So when you do the books, when you prepare the financial statements, you can accurately reflect what's going on in the business in terms of acquisitions, in terms of disposals, and in terms of relevant depreciation. Furthermore, this also helps you meet compliance requirements because, for example, let's assume that you are a corporation, and as a corporation or a public limited company, you must publicly publish all financial statements that you produce in a given year, right? So that financial statement, such as the balance sheet, they need to reflect all the non-current assets that the business holds at a typical point in time and what happened to the previous or any non-current assets that you have disposed. This also helps you understand the regulations of whatever country you do business with and therefore meet compliance requirements. Lastly, you could also think of the function of a non-current asset register as to prevent any mismanagement of asset. So basically, there is a transaction that tracks everything with regards to acquisitions, disposals, and depreciation. So you know that where all the values that are being reported are accurately reflecting what's actually happening in real life in the corporations. Okay. So now that you're done with question number 4, let's see what's happening with question number 5. All right. So question number 5 here has to do with some understanding, not with just non-current assets, but also with the correction of errors that you have studied in ACCA. So the first question is, how would recording an invoice for motor vehicle repairs by debiting the motor vehicle at cost account affect financial statements? Would the following be overstated or understated, and you have got profit and net assets? So what's really happening in the first part of this question, in question number 5, is that we have made an error of principle. And why is this an error of principle? Because we have recorded the transaction in the wrong category. Now we have incurred an expense, which is the repairs expense for the motor vehicle, but we treated this as if we had purchased a non-current asset. Make sense? So we were supposed to pay for an expense, but we ended up treating it as the purchase of a non-current asset. And this is basically recording in the wrong category because expense and assets are different categories. And because this is recorded in the wrong category, we call this an error of principle. Now, what is the effect of this error? So you had an expense for motor vehicle repairs, but you did not record that, right? So which means you have understated the expenses. And you recorded this as if you purchased a non-current asset, which means you overstated the assets. So based on the requirements of the question, if expenses are understated, if you are showing less expenses, then definitely your profits that you calculate in the income statement are going to be overstated. Make sense? Because we calculate profit by subtracting all expenses from the gross profit. So if you're understating expenses, then your profit is definitely overstated. What about net assets? So net assets are overstated because if assets are overstated, net assets are definitely overstated as well, because net assets simply refer to the total assets minus total liabilities. So if your total assets are overstated because you recorded this amount as part of a motor vehicle purchase, then definitely your net assets are also going to be overstated. So the final answer of the question for part one is that profits are overstated and net assets are overstated. Okay? Now, what type of error is this? So we have already figured that out for the second part of the question, which is error of principle. And why is this an error of principle? Because we have recorded the transaction in the wrong category. We have incurred an expense, but we ended up recording this as a purchase of a non-current asset. So expenses and buying assets are two different categories in itself. And when you record the transaction in the wrong category, that is when we call that an error of principle. Okay? Now, the third part of the question is asking you to explain each of the above errors. So let's start with the error of commission. The error of commission is to record transaction in the wrong account, but within the same category. So let me explain you what that means. Now, let's say we run a business where all the sales are made on credit. And we have this transaction that had taken place where we made a credit sale to customer A, right? But when we wanted to record this in our books, we ended up recording this in the accounts of customer B. Now, both customer A and customer B are what we call the accounts receivable, or the credit customers of the business. So both customer A and customer B fall within the same category of accounts receivable. But what happened here is that the sale that we have made to customer A was not recorded in the account of customer A, but rather it was recorded in the account of customer B. So this is where this becomes an error of commission, right? Now, error of principle is something we have discussed. What about error of omission? So error of omission is simply that the bookkeeper has forgotten to record this. So basically there's no transaction at all because this has been forgotten. The next one is transposition. So transposition simply refers to the digits, the numbers being accidentally reversed. So for example, you were supposed to record $89 for any transaction, but you ended up recording it as 98. So you can see how the numbers got misplaced. Like 89 is being shown as 98. So this is what we refer to as the digits being accidentally reversed, and that's what we classify as an error of transposition. All right. So that's all for question number 5. So let's move to question number 6. Okay. So in question number 6, Jacob purchased a delivery van on 1 July 2023 for $60,000. It is to be depreciated at 25% per annum on the reducing balance basis, starting from the month of acquisition. The $60,000 was accurately recorded in the cash book. However, it was mistakenly posted to the debit side of the delivery van repairs account. How will the business profit for the year ended 31 December 2023 be affected by this error? Right, make sure to focus and follow through. So we are working with an asset, which is a delivery van that we have purchased on 1 July 2023, and the original cost of the purchase is $60,000. We depreciate this at 25% per annum using the reducing balance basis and starting from the month of acquisition. Now, we are calculating the profits for the year ended 31 December 2023, so which is basically in the same financial year as the purchase of the asset, right? Okay, so although you're using the reducing balance method, which normally calculates depreciation by multiplying percentage on the carrying amount, in this case, you're not doing that. In this case, the asset is still in its first year of usage. So if you want to find the depreciation, you can simply apply the given percentage on the original cost. So the given percentage, you can see the workings on the right-hand side. So the given percentage is 25. And we multiply that with the original cost of $60,000, and that's how we get depreciation of $15,000. But hang on, this 25% is actually an annualized rate, as the question clearly specifies it, per annum. So whatever amount we just calculated, which is $15,000, this amount is actually valid for 12 months. But we purchased this asset on 1 July 2023, And we are calculating the profits for the year ended 31 December 2023. And the question clearly mentions that you are to only depreciate from the month of acquisition. So from 1 July 2023 until 31 December 2023, you've got 6 months in total, right? July, August, September, October, November, and December. So that's 6 months in total. So if $15,000 is the depreciation for 12 months, then the depreciation for 6 months is $15,000 divided by 2, which is $7,500, right? Now, what is the error of whatever happened in terms of recording the transaction in the books? We know that we accurately recorded this in the cash book, which is basically showing that you have a cash outflow. But what happened was that you ended up showing this as a repairs expense and not the purchase of an asset. So the error here is that the purchase of an asset is shown as an expense. Okay. Again, this is an error of principle because assets and expenses are different categories, and this transaction have clearly been misplaced in the wrong category. Now, because of the error that has been made, we are overstating expenses by $60,000 because we are showing repairs expense of $60,000. That essentially means that you're overstating expenses by $60,000. All right. But the question is asking, how will the business profit for the year be affected by this error? Now, when we are thinking of business profit, we need to think of all the expenses that are involved in this case, right? Now, based on the error, we understand that expenses are overstated by $60,000. But hang on, what about the depreciation? Now, the depreciation we calculated for 6 months is $7,500, which is actually correct because we have to record this because this depreciation is referring to that non-current asset which we purchased on 1 July 2023, and this asset would already be in use in the business. So this depreciation of $7,500 is actually correct, right? So the net overstatement in expenses is actually the difference between $60,000 and $7,500. $60,000 is wrongly recorded, but $7,500 is correctly recorded because we have purchased a non-current asset which we need to depreciate anyway, right? So the net overstatement in expenses is in fact the difference, which is $52,500. So if the net overstatement in expenses are $52,500, then profits should be understated by $52,500 because the more expenses we have, the less is our profits. I believe that makes sense to you. So that is answer number C. Profits is understated by $52,500. Okay. Second part of the question, what type of error is this? We clearly know that this is an error of principle because this is in the wrong category where we recorded an asset as an expense. Okay. All right. So that's all for today's lesson. Make sure to like this video and subscribe to this channel. And if you found value in this content, make sure to post them down in the comments below and suggest me other topics that you would like videos on. I'll see you in the next video.